What's up, traders? Today is Thursday, February 15th, and I'm just doing analysis from some trades we took yesterday during the live session. Yesterday was Wednesday, February 14th. Now here, the first trade we took was a US 30 trade. Now for US 30, our daily bias, if we look at the daily bias was bearish because the last daily closure of an SAR level was bearish. So I had identified this double SAR zones here for US 30. So we have this one at the top, this one at the middle, we have two right here, and this one at the bottom here. Now here, this two candles, so this was during New York Open, so you can see this is the 9:30 a.m. candle. So there was already a test and rejection up here. So this two candles, so this one tested and rejected off of this zone, but this was pre-New York. Personally, I don't trade pre-New York session, but this was a nice test and rejection, and you would have come in and entered on the retest of that zone right here. So this would have been a nice trade during market open. But the other thing I also noticed from journaling is that it's not advisable to trade the New York Open candle, but this would have been a nice trade that would have gone straight to TP. But actually we had lost. If we look at some of the trades we've taken in February so far, I believe this was the Thursday trade for the previous week, because I just started trading for this year in February. This trade, either this one on Thursday or this one on Friday of the previous week, I had entered in on the New York Open candle on a trade setup that had validated, and it went to stop loss. So sometimes it's just a matter of knowing those risks that sometimes during New York Open you can either get manipulated and get stopped out almost immediately, or you can get go to full TP almost immediately. So like yesterday, you'd have gone straight to full TP, but upon back testing, I don't think it's worth it catching the New York Open candle. But anyway, so that was a nice test and rejection. But you can see this candle that came back up offered a test candle, and the next candle would have been a rejection candle. So technically here there were two trade setups, right? So this one, and this was after New York Open. So test and rejection sell. So it did validate. Let's see here. So test and rejection. So, and I always mention this because based off of this zone, always ask yourself, as much as the test and rejection setup validated down here, you always ask yourself, relative to your entry, where is the SAR level you're trading? Because you always want your stop loss to be above or below the SAR zone you're trading, depending on the direction. So here you can see that the stop loss would not, because for me I use a 50-point stop loss on US 30 and 100-point TP. So here you can see that our stop loss would not even be anywhere close to the SAR zone we are trading, unless you decided to extend your stop loss. But personally, I do not do the extensions. I trade with a static TP and stop loss. So here you had two options. You had the option of waiting for price to retrace back up here, and then you enter, and then you go down there. The other option was we had this zones right here. So this zone, zone 1, zone 2, zone 3. So these three zones presented with the same two candles, they gave you a break and continuation setup. So same thing with a break and continuation setup. If you are to enter here and you're trading, say, this two zones, your stop loss is about double, or the zones are about 50% of your stop loss. So you ask yourself, is that worth the risk? So always ask yourself, which is the most optimal zone? So if you're trading a break and continuation of these three sell zones, then this zone would be your most optimal zone. If you're trading the test and rejection setup, then of course this zone would be your most optimal zone. So at this point, I still saw this as a red flag because this setup had broken so many SAR zones. So I just wanted to wait and see. So I'll go ahead and delete those. And then what we did, we waited for the next 15-minute candle. Now, these two candles down here, this candle and this candle, validated this zone, SAR zone right here, as a break and continuation. So here, what we actually traded was this. break and continuation zone, because these two candles only validated one zone. They did not validate break and continuation sell. They did not validate multiple zones, so that was a good thing for that particular trade. Now here, what I did at this point, I said I was selling US30 with a 50 point stop loss, 100 point TP, and that's the trade we took. But even during the live session, I'd said that this was my preferred trade, this one all the way at the top. Now when we entered this trade, unfortunately the trade went straight to stop loss. Now look at where the candle went. Now here I'm just doing a bar replay because I'm doing recap of yesterday's trades. So you can see here the most optimal out of the break and continuation, out of the test and rejection, the most optimal zone was a test and rejection zone, and this also lined up with the daily SAR region, the daily SAR that had been formed around 33,400, because normally you expect price to go back up there, retest, and then come back down. So after a daily bias is formed, if it's such a huge candle like here on this daily, you normally expect the next daily candle to retrace. It doesn't always happen, but if it's such a large candle, you normally expect price to retrace back to that SAR zone that has been formed in the daily. So that's why I drawn this yesterday on the live session. So same thing with gold right here, right? So you can see this gold candle closed, this was $20, actually 30, so 300 pips below where the SAR was formed, that caused us to shift our bias from bullish to bearish. So that's why I even drew this for gold. I do expect gold to retrace around 2020 region before coming back down, and you can see that looks like what's happening on gold right now. Now here on US30, so here we got stopped out at this point. Personally, I normally risk 1% per trade, but the trade counts that I do track here is 0.75 because I don't want anybody to risk 1% per trade. So I normally say for this trade, you guys should risk 0.75% per trade. And personally, I normally do like 2 trades a day at most. So if I do lose both of the trades, I'm down 2% for the day. If I do win both of the trades, because I normally have 1:2 risk to reward, I'm up 4% for the day. So here, look at what happened here. So this right here was a test and rejection. So let's analyze the test and rejection entry. Test candle, rejection candle. So normally, of course, this would have been a red flag, right? Because the distance between the entry, even for the test and rejection, relative to the SAR zone was like way past your stop loss. So normally what I advise people to do in order to avoid FOMO, mark up where somebody who entered the trade, regardless of the trade, the candle being overextended, would have achieved a 1:1 risk to reward. Because for me, I advise people, if you achieve a 1:1 risk to reward based off of my TP and stop loss calculations, you go ahead and set break even. So normally you would want your the candles or price to come back and fill your trade in first before giving this person a 1:1 risk to reward, and then price does something like this. So here, this was the entry right there for test and rejection, because you just wait for price to come back to your zone, and then this would have gone literally straight to full TP right there. There you go. So that if we had waited, would have gone straight to full TP. But do I feel bad for taking this first trade? No, I do not, because always ask yourself, is there anything better you could have done? Now, the test and rejection entry and break and continuation entry are 2 separate setups. Now, if on the other hand, if I had taken this break and continuation sell, but I had a better break and continuation entry, then that I would have felt bad. I would have said, okay, maybe there's something better I could have done. But this break and continuation entry was based off of one SAR zone, right? Those 2 candles had only validated one SAR zone, but previously the 2 previous candles had validated 3 SAR zones. So in that instance, that's where you always want to look at the optimal entry. So here, would I would go back in time. Yes, I would, because the trade made sense and there's really not a better optimal trade based off of that zone that was presented to me. But yes, the test and rejection entry was a nice one. So going forward, if I do ever get such a trade, and I'll put this in my journal, if I do get a similar trade setup in future that validates a test and rejection and a break and continuation, even for those two, then I'll check between the test and rejection and between the break and continuation, which one is the most optimal setup. So previously what I was doing, I was looking at the most optimal setup per setup. So if I have like 3 test and rejection entries, I would look at which is the most optimal test and rejection entry. If I had 3 break and continuation entries, I would look at which is the most optimal break and continuation entry. But going forward now, what I'll incorporate is I'll look at which is the most optimal setup. If I'm presented with a test and rejection entry, and if I'm presented with a break and continuation entry, I'll look at between those 2 entries or those 2 areas, which is the most optimal area. So that was the first one. So at this one we lost 0.75. Personally, I was down 1%. And then we had gold. Now gold here, yes, our daily bias was bearish, right? However, when I turned on the markups indicator with that shows us the order blocks, I looked at, okay, where is it? I looked at the markups indicators that shows us the order blocks, and also I turned on the zones indicator that shows us where the buyers and sellers are. Now if you can look here for the markups indicators, we had a daily bullish low. Now remember, every high time frame order blocks have the most confluences. So here I saw we had a daily bullish low at 1986. Now we rarely see daily bullish or daily order blocks, whether it's a bullish order block, whether it's a bearish order block. So I saw this rejection at this daily order block, daily bullish low. So I took this and I marked it up. So it was at 1987. So I translated that into the 15-minute chart that we were trading, and then I marked this up and say daily bullish low. Now in my experience, I've found that especially at these order blocks, high time frame order blocks, they manipulate. As much as you have some sort of price rejection from it, they first mitigate it, or they first do a stop hunt around that area. So I was expecting gold to go around 1984, 1985 area. And I mentioned to people on the live session that this was a good place to do a pending buy order after price goes somewhere down here. But I was looking to enter this particular trade as much as the daily bias was bearish, but also looking at the daily bias, whatever caused our daily bias to turn bearish. I did see this pattern play out. So gold going back to around 2020, 2000 area before coming back down in order for it to retest that daily SAR that it created. So here what I did, I marked this up, and then what I wanted to see, I wanted to see this. So you can see price did some stop hunting, and then what I did at this point, I went down to the 5-minute time frame. On the 5-minute time frame, what I wanted to see was higher highs being created and higher lows being created. So we wanted to see price or a momentum entry, momentum signal. So here we waited for that. So at this point we started seeing this high lows and possibly higher highs. So at this point I saw we had 2, so it's similar to a break and continuation entry. We had 2 consecutive candles closing over this daily bullish low, because I knew if price came back up there, we would have a spike in liquidity. So at this point I said I was buying gold. So same thing, personally still used 1% for normal or for the regular people on the Discord. So same risk, 0.75, and we were in this trade. So if we keep playing around with this trade, came down, almost got manipulated out of it, but eventually price went back up, and eventually price hit full TP. For me here, I did not exit yet because I think there was some slippage, but here you'll see that eventually price came back up and went all the way to full TP. And look at where gold is right now. Today is, I know we're about to have the unemployment claims, but look at that. So the pattern played out perfectly. So here, from being negative 0.75% for the day, we ended up the day positive 0.75. So this is the best thing about having that 1:2 risk to reward. Now if we go to the Discord, so you'll see the trades that I took. So in manual results, so you'll see this is the US 30 trade that I lost. I was down 2k. When I won the gold trade, I was up 4k, just ending the day just a little bit under 2k. So that's the beauty of that. And one thing I've started doing this year is journaling my trades. So you can see, I was telling you guys, normally I take at most 2 trades a day, and you can see here basically I'm back to break even for the month, because it started off the month with this loss and then made it back the next day. Lost 2 trades the next day. The next day I think I was a little bit over break even, and then I won a trade, one of the trades yesterday. So currently I'm still break even for the month. Here we are down minus 0.75 on the official trades, because for me personally, I'm a break even, because on this day, yes, we didn't have a live session, but I found a trade that I took on my own. So that's another reason why I always tell you guys, make sure you understand the strategies, because you can come and trade with me on the live session and we take a loss, and then the next day maybe we don't have a live session. Personally, I catch a trade and then I end up making it back, but for you maybe you're still in a loss. But one thing I definitely encourage you guys to do is to do to start journaling your trades. What this does, it gives you accountability, right? Because you want to start seeing how you're doing as a trader, because if you're not journaling, if you're not knowing why you're winning, why you're losing, maybe you can keep repeating the same mistakes over and over. But if you're journaling, then you start saying, okay, wait, I need to be serious. Okay, I need to journal this. I need to know why I'm winning. I need to know why I'm losing. So it's not about the amount of trades you're taking. It's not about the strategies, whatnot. No, it's about tracking your progress. So that's one thing that I would definitely encourage you guys to do. So the journaling software I'm using is called Edgewonk. If you go to edgewonk.com, you'll find it, and I think it's like $160 a year. So for me, that's a no-brainer. The value that you'll get from journaling your trades, I'm telling you, it is much better, or much more profitable than just than the $160 a year that you will spend. So I know there's a bunch of other journaling softwares or software out there, so but for me, this is just one of the ones that was recommended by one of the members in the Discord, and I really love it. I'm still getting accustomed to it, but yes, so I'm not affiliated with it, let me just say that, but it is a nice journaling software. But anyway, until next time, I'll catch you guys on the next one. And if there are any other trades that we take this week, so this week, this is the only trade I've taken, and you can see we are up nicely. Personally, this week up 1%. For anybody who took the trades this week with me, up 0.75%. So that's pretty good. So I'll catch you guys on the next recap. Peace. What's up, traders? Today is Friday, February 16th. As always, I'm doing a weekly or a daily recap of our trades. So yesterday we took some trades we took 2 trades. One trade was during the live session, and the other one was post the live session, because I sent it out as an official trade in the Discord, and we will go over those 2 trades. So looking at the daily bias, yesterday we were bearish on US 30, bearish on the on gold, bearish on EU, and bullish on the US dollar. Now, during the live session, we had this trade setup of EU. So I'll go ahead and recap, or just apply the bar replay tool right here. So you can see, and if we zoom in, EU was pumping up. It had a bunch of what are they called, sell SARs, and if we keep looking at this, EU kept spiking up. So we identified this one zone up here, we identified this other zone up here. So if we look at the next candle, there you go. So this was a test and rejection entry. So you have your test candle. You have your test candle, which is this. It tested that zone, actually test and rejection of 2 zones, because we have this zone right here and this zone right here. So you have your test candle that tested both of those zones and your rejection candle that rejected off of both of those zones. Now here, if you guys remember in the previous recap, I said when you have two setups, whether they're similar or different, always ask yourself, between these multiple setups, which is the most optimal zone? So here we got a test and rejection of two zones, this zone and this zone. Because we are looking to sell, of course, the upper zone is the most optimal zone. So here, let me return. So now what we're looking for here, again, you always ask yourself, at what point relative to your entry, because the trade validated down here, relative to your entry, where are the SAR zones you're trading? So in this instance, and we are using a 15 pip stop loss and 30 pip TP, the zone we are trading, if we entered upon validation, the zone we are trading would have been about 50% of our stop loss. So to me, that's a red flag. So what you do, it's better to wait for price to come back to that zone you're trading in, and then you enter from there. But in the meantime, you also need to mark up where somebody who doesn't care about overextension would achieve like a 1:1 risk to reward. So again, you would anticipate, or you would want the trade to come and fill you in first before giving this person a 1:1 risk to reward. So here, what we were expecting is something like this, something like that. Now, if we keep, and also this sell signal, this is a valid momentum sell, because this is the GA Trading Club momentum indicator, because this was a valid momentum sell. However, another entry for the momentum sell, you'd have waited for price to come back to that region as well. But same thing here, if you get multiple setups, ask yourself which is the most, and we'll see the reason for that, which is the most optimal momentum, or which is the most optimal setup out of those that we're getting. So let's just assume that we had waited for price also to retrace for this momentum sell with near the similar, right, almost the same kind of TP and stop loss. So we didn't take the momentum sell. For me, I found that the most optimal trade setup was the test and rejection of this zone above. So if we replay, you can see price came back up. So it did not give this person a 1:1 risk to reward yet. And you can see anybody who had entered that trade right there, whether it's the momentum sell right here, or upon the validation of the test and rejection, the trade would have gone straight into drawdown, came back a little bit. Actually, wait, give me 1 second right here. Gone into drawdown. So as much as it went into drawdown, it would have tagged in anybody who was trading the momentum sell, or even the person who took the test and rejection upon validation. But also, if we remove this test for momentum sell we are looking at, look at where our trade got triggered at. Our trade at this point, and this was still during the live session, this is when I told folks I'm selling EU, and for the people in the live session, or for the people in the community, I normally ask them to use like a 0.75 risk per trade. So we are in this trade is 0.75% risk excuse me, per trade. Personally, I normally risk 1% per trade. And you can see here, trade came in exactly where we wanted it, tagged us in, barely had any drawdown, and then came back into profitability. So as soon as we had achieved this 1:1 risk to reward, here, as soon as we had achieved 1:1 risk to reward, I sent a notification in the Discord and asked people to set break even for the trade. Now this trade almost came to full TP, but we had some retracement just as we were about to hit full TP. So for me, I don't take partials or anything. For me, it's always either stop loss, take profit, or break even. That's just what works for me. I'm not saying that taking partials is wrong or whatnot. Everybody has their own style of trading. So here, trade came back up. Now the thing here is, anybody who had entered either the trade when it validated down here, they would have ended up getting stopped out at break even. That's the difference. That choosing the most optimal setup can make the difference between you getting stopped out at break even, or even hitting stop loss or being stop hunted. So you can see here, anyone who had taken the trade at validation, or maybe even for the momentum sell here, might have gotten taken out at because the trade came back again during Asia and London. EU came back all the way up again. And you can see here now the person who had taken the momentum sell, which was not the most optimal sell, again taken out at break even. But for us who had taken the most optimal sell, you can see we survived getting taken out. And this morning, during this spike to the downside, we achieved full TP on that. So that's the first trade. Now, yesterday also, later on in the day, I had sent out a US 30 trade. So I said selling US 30 now, 0.75% risk, and it was based off of a test and rejection. So let's review the US 30 trade from yesterday. So this was the US 30 trade from yesterday. Let's go ahead and apply the bar replay tool. So here we had a couple of zones. We had a couple of double SAR zones here. And also if we turn on the order blocks indicator or the markups indicator, you'll see we were playing around a 4-hour bearish order block. If we turn on the zones indicator to show us where buyers and sellers are sitting, we were sitting where we had a bunch of sellers. So we had a bunch of confluences for sells. Now here we had this candle that tested again, similar to EU, tested this SAR zone and this SAR zone here. And then what we would have wanted, all my entries are based off of 2 candle formations, 2 consecutive candles. So that's your test candle. We would want the rejection candle. So that's the rejection candle. So both candles are close below that zone. So here, at this point, the candle closure relative to the SAR zone is not too far. So this is not a red flag. It's just like 2 pips or 2 points away. So that's good. So that one you can enter on impulse. You don't have to wait for retracement. So here I sent the notice to the Discord. I said selling US 30 now, 0.75% risk, 100 points TP, 50 point stop loss. Now here, unfortunately, what happened here was a stop hunt. So stop hunt or stop trade. We started off well, but you can see this huge spike in price. And look at what happened later on. Price consolidated around that zone and eventually came back where it was, but we had already gotten stopped out. That's why for me, I always let stop loss hit. I don't extend my stop losses, because the one day you choose to extend your stop loss, that's the day price is not going to come back in your direction. So here, and I sent the notice in the Discord after we hit the loss, said stop loss hit for a minus 0.75% return. So it's all about also having that transparency. So if we see what later on transpired for US 30, had that ranging during Asia session, and then this morning, that's when we had that huge sell-off that happened right there. Would have gone to TP. So this was the US 30 loss from yesterday, and this was the EU win from yesterday. Now if you do the math, this is why I was talking about having a nice and proper positive risk to reward ratio. The US 30 trade, we lost 0.75% per trade. For the trade, personally, I lost 1% for the trade. For the EU trade, we made 1.5% if you are using a 0.5%, 0.75% risk. Personally, since I use 1%, I made 2% on the trade. So since here on the spreadsheet that tracks our returns, I mark up using my recommended risk per trade, which is 0.75. You can see we ended the day yesterday with 0.75 gain. So right now for the month of February, we are, for the official trades, we are at break even. Personally, I'm up 1% for the month of February, because again, if you remember, I said this Wednesday when we didn't have a live session, I took a trade on my own that ended up in a win. So that's the key thing right there, because if we count here, we had a loss on Tuesday, loss on Thursday, break even on Friday, and then this past Wednesday we had 1 losing trade and 1 winning trade, and same thing about Thursday, 1 losing trade, 1 winning trade. So we've had 4 losses, 2 wins, and 1 break even. So you can see having that 1:2 risk to reward. As much as we had 4 losses, these 2 losses covered those 4 losses, and we are back at break even. So that's the critical thing about having a positive risk to reward. You don't have to really worry about losses. Losses are part of the game. You just have to be comfortable with them. And so long as you know that your strategies are working and your strategies are solid, that's all that matters. Everything else is a smokescreen. But anyway, so let's see if we do catch anything today on Friday. But other than that, I will catch you guys on the next recap. Peace.